Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And we are going to start off with a listener question this week that we definitely thought was worth addressing because it has to do with our company in particular.
That's right, Miles. This question came from Douglas. Douglas stated, "So I've listened to you all for a while now and wanted to say thanks for all the great insight into the precious metals markets. I listen to the broadcasts often, and at the end you always say, give us a call. My question is, do you help the small investor out with a few ounces per year, depending on metal? In your commentary, you speak of investors that have large holdings. Is there an option for us fractional 1 ounce buyers? Thanks again."
Well, Douglas, certainly thank you very much for tuning in every week. We appreciate you stopping by and trying to gather all the information you can, just like we are. So as a company, absolutely, on the precious metals side, we could care less if you've got $500 or $500 million, because for us, and the way our investment strategy works, it's a percentage-based investment approach and a diversification based on purpose, not just on asset size. But on the precious metals side, I believe everybody in America should at least own 1 ounce of silver or more.
That's right, Miles. That's a good point. We do take any size of trade, but I just want to mention that, everybody should, as you say, have at least some silver, some gold in their possession. But one of the other things that we love to do here is work with retirement accounts. We do a lot of IRAs, and one of the reasons that we're so gung-ho about that is because when we get into our ratio trading strategies, it's all tax deferred. It's a tax deferred vehicle, so all your gains are tax free, and we can see some significant movement in those accounts as well. That being said, let's get right into it, Miles. We've got some more action in the metals this week. Let's start off with gold. What'd you see in gold?
So with the Fed Open Market Committee announcement coming up next week and about an 80% expectation, and I have no idea where they come up with that number, but Bloomberg's saying there's about an 80% expectation that they are going to lower interest rates here in the U.S. by at least a quarter point next week. So with that, I would argue just about everything's in a holding pattern, except for a couple of the white metals that we're going to get to here in a minute. But gold coming up into the 1440s, pretty strong here a week ago, is now sitting back in the 1420s, inching up slightly, but hasn't really taken much of a correction back down. So we'll have to see what happens if we have an interest rate drop in the short term. We haven't had anything that really resembles a correction. I think a lot of that has to do with the market pricing in the expectation of lower interest rates. Lowered interest rates means more inflation coming down the road.
And with bringing inflation back into the game, you've seen silver respond as you should in an inflationary environment. Silver up again today as we record on Wednesday, another 1.5%. We're up to 1667. I know, Miles, a few weeks ago, you wanted to see us break through 1620. We seem to do that with no issue. Where's the next level of resistance for silver?
Well, I think we're at that next resistance point right now. We've been building this channel since the end of last year when we put in those October, November lows, stepped up to a high, came down to a higher low. Now we're at a higher high. We could obviously continue up. I mean, the next major resistance point is going to put us somewhere in the 1725 to 1750 range. Again, the thing I'm looking for is for silver to have a little rubber band snapback as far as the ratio goes, play catch up with gold, and that doesn't happen until silver shows us a breakout above 20. So we're definitely getting there. That move could happen pretty quickly. I mean, the ratio is down from 93 all the way down to 85 to 1, gold to silver ratio. Right. So we've definitely regained some ground here over the last couple weeks in silver, same with platinum.
And with that 8-point move in the ratio, Miles, it happened very quickly. That was in just a little over a week, which one of the things we've been telling our clients as we're structuring these portfolios and is, let's go a little heavier silver, because when the metals start to take off, silver will outperform gold. And the last week and a half has been a perfect example of that. Even as they're both moving up in unison, silver is outpacing gold. Again, today, gold's up about 0.5%, silver's up 1.5%. So that's what causes these ratios to shrink. Another ratio we watch is the platinum to palladium ratio, and platinum seems to be picking up some steam. I think your resistance target for that, it was up in the 970s as of right now on Wednesday, 881, up about $20, 2.5% today. 970 still that resistance target, Miles?
Sure. The 880, 881 level where we're at today is right at the 786 fib down. So the corrective rise back up on the previous fall. But, platinum's made 1, 2, 3 touches on the bottom end as it's been in its rising channel. Silver is one cycle behind that. So platinum's next move up, I think, is going to retest up above 900. where the high from back in around March and April earlier this year took place. And that actually is going to line us up with the long-term declining channel. Now, we get above that channel, we start pushing into the mid-900s, and I may hint at the word breakout on the platinum price at that point. And then briefly touching palladium, just because it's still sitting at or right around those all-time highs. Sure, we had a little bit of a correction back down after it pushed up to 1,600, but we're still sitting above 1,500. It's still looking very bullish. Could be topping out here because the second time we came into that high, we only pushed a few dollars higher than the previous time earlier this year. So we could be seeing the same type of pattern in palladium that we've seen in the Dow over the last year, where it's trying to inch higher, but it's not getting very far. And every time it falls back down, it falls pretty hard. So moving over to the Dow, I want to play a fun game today that we're going to call Why Though? Because we're looking at an interest rate drop next week. In fact, the entire market is expecting an interest rate drop next week. So I want to ask our listeners out there in audience YouTube land, why though? Why are we looking at an interest rate drop? I mean, with the stock market at all-time highs and bumping up against this rising top that it looks like we're making, the only reason from a stock market perspective I could expect to see the Fed drop rates in order to boost more money into the market is because they see the same things in the price that I do. Last time we came up into this pricing range, we had a almost 20% drop in the Dow. The next time we come up into this pricing range, which is occurring this week, if we follow that same trend line on the bottom end, we'd be looking at a over 30% drop in the Dow. And maybe they know you can't recover from that. So I'm just going to ask, why though?
Why though?
Why are we doing this? Like, where's the benefit, seriously, in dropping interest rates at this point? Right. So I have a guess that maybe we can get into next week as to why they're looking at interest rate drops. But I am kind of curious if there's someone out there smarter than me that can help me understand why, when things are going seemingly exceptionally well for the U.S. markets right now, would we dare hint at lowering interest rates when the plan had been to slowly start chipping them up and let our currency get healthy again?
And not only are the equities doing well, we're talking about the longest ever bull market and the highest ever prices.
Right.
So
why though?
Why though? Exactly.
Why though?
And we know there's some of you out there that are smarter than Miles. We just need you to comment for us. So, we really would like your input on this. If you've got any great insight, let us know.
Sure. And the dollar remains in a rising channel. Mm-hmm. Why though?
Right.
Like, we're nowhere near the all-time highs on the dollar. Why would we be looking at this? So I'm trying to figure out, other than politically motivated, why this would be happening right now. And again, I've got my guess, and I'm going to hint at it here in a second, because I want to also look at the euro and the euro chart and where the price of the euro is going. We're back down to the Brexit vote pricing with the European index down under 112 at around 111, and has been doing nothing but going down since 2018, just like the dollar had rebounded pretty significantly. I think we should also mention that the pound pricing, hey, here's something that hasn't happened during half of my lifetime. The British pound is almost 1-to-1 with the dollar. I mean, that's a big deal. It's been decades, all through the 90s up until the mid-2000s, that the pound was worth about twice the U.S. dollar. Right. Now the British pound's at about 1.2 to the dollar and continuing to fall. Mm-hmm. So maybe there's a little bit of international pressure as far as the sale of our exports, mm-hmm. where we need to be more competitive in order to boost that pricing by lowering the dollar. But seriously, why though?
Yep. And, we've got a president who's been adamant about this over the last few months, and it doesn't seem like a day goes by where there's not a tweet insulting, either our Fed or a little bit of jealousy in what Asia and Europe can do with their currency as opposed to us having the strong dollar. He clearly does not want a strong dollar. So maybe he got his way into Jay Powell's head there.
Very likely. And coming back to the British pound and the president, on one piece of news I think worth mentioning, it turns out England, even though they held an anti-Trump rally a couple years ago, in fact, I still remember the floats that were going down the street, which cracked me up, the burning Trump heads and things like that. England has just elected their own personal Donald Trump in Boris Johnson.
Which implies there's going to be a hard Brexit. I just want to mention one more thing, Miles, as we talk, politics and economic policy. This government, since President Trump was elected, has not been able to agree on one single thing. Everything has been a battle, from the most tedious things to the biggest things. There's been a battle between the left and right, except for this week when it came to the budget deficit. And if, we're set to run out of money, no big deal. Both sides come together, they agree, let's not worry about it. 2 more years, we're fine, just like that.
Sure, it seems to be the only thing all Americans can agree on, whether you're left or whether you're right, whether you're down the middle, whether you're a politician, whether you're a plumber, it doesn't matter. It's perfectly fine to spend more money than you make.
Money that you don't have.
Yes, right. And never will. Only thing we can agree on.
And that's why we here for, since 1972 have been so adamant that every citizen, not even just American citizens, every citizen, because this can happen in any country. We've seen it happen in many countries. You need to have a portion of your portfolio in physical precious metals.
Because fiat currencies are an ever-present risk of hyperinflation and always lead down that road. And we're seeing that today.
Well, that's going to do it for this week. Thanks for listening to Golden Rule Radio. If you like what you heard, ring the bell. Go ahead and subscribe to this channel. You can also find us on Facebook at McIlvaney Financial, Twitter at ICA Gold, or head on over to our website at McIlvaney.com. If you'd like to speak to one of our advisors, feel free to give us a shout at 1-800-525-9556. Thanks for listening.
Have a great week.